questions for you, Mr. Iyer. So, can we begin by telling me who you are and a bit about your background, please?
Yeah. So, I mean, a lot of friends here, so a lot of people know who I am, but I'm a lot of different things. You know, I built an artificial neural network before the blockchain world. But the speech and economics is a leading innovator. It's called Spouser, the first artificial neural network for online matching. Built a hardware company in 2007, which got acquired by a Japanese company. It was one of the first tablet devices in the world. Part of the P2P Foundation, you know, so one of the genesis, you know, one of the places where everything started in the crypto world. So, did a lot of different things. Worked for many years for large American companies like Red Hat, SUSE, building large technical solutions, worked on cybersecurity, cyber defense for many years. So that's my background.
Thank you for the brief introduction. So you've worked all over the world and you're very experienced in blockchain. So that's the gist of what I got. Okay, so next question. How are you currently involved in blockchain?
There's another microphone.
Sorry.
No, we have a couple of microphones. There's one there. I'll get your one here. So it's easier. No? Or you have to do the question, you throw the mic and I'll catch the mic. So I'm part of the P2P Foundation. So if you know, P2P Foundation is if you Google Satoshi Nakamoto on your phone, the first link is a Wikipedia link which will tell you that the only place Satoshi is the website, the P2P Foundation. And then if you open another tab, it's for P2P Foundation ambassadors, among 8 ambassadors. So my association with the whole crypto thing came about because of my involvement with the P2P Foundation. I was a researcher at the University of Oslo in Norway, and Michelle Bowens, who's the founder of the P2P Foundation, was a co-teacher in one of the master's courses I was teaching during my PhD. And I spent 10 years before that working for open source, you know, the whole peer-to-peer stuff. So he said, you know, you have this open source and peer-to-peer background, and you know, we're studying this car sharing, house sharing, all that stuff. So why don't you become part of the P2P Foundation and help us study this? And so when I became part of the foundation, a couple of months later, there was a guy called Satoshi Nakamoto. We thought was a Japanese guy who came and created a wiki page on the P2P Foundation wiki. And the white paper was published and everything else was history. So we started mining crypto since 2009. You know, cryptos at that time didn't have any value because nobody bought cryptocurrencies. Right? And then Mt. Gox was set up, the first Bitcoin exchange in the world, and cryptos got traded, they had actual price, and so that was the origin of my involvement in the whole blockchain space, right from the beginning.
Wow, okay, that's a very long past that you've had, a very long history. Okay, so next question. So that was your involvement with P2P and blockchain. So how did you get involved in ICOs?
So, you know, there was really no ICO in 2011 and 2012. The first ICO was done by a friend of mine called J.R. Willett, who's Omni Mastercoin. After which it became an interesting mechanism through which people started raising funds. It was a new way to raise money, right? I mean, all the companies that are struggling to raise VCP money used ICOs as a way to raise capital. So around 2016, mid-2016, late 2016, a lot of Asian companies reached out to me. In fact, one of the first events in Singapore was done by Joe Signon of Lattice80. So they had an event called BlockCon. And XSQ Capital Prakash, there's another guy called Gerben Wieser, I think he's left Singapore now. So they all came out and they wanted to do an event. So they reached out to me because I was speaking in a lot of different places. I spoke at the first event in India in 2014 called Masscom DSCI. I spoke at a couple of events in Europe before that. So they reached out to me saying, why don't you come and speak on blockchain? And that's how it started. And a lot of people are looking at doing an ICO. So one of the first ICOs from Singapore is called AMBR, AMMBR.com. It's a Singapore listed company, and they were looking to do a token sale. They reached out to me and helped them out on that. And after that, we've done quite a few projects. The first one from India, Wandex, first one from Canada, tokens. First one from Finland, Soma, first one from Ukraine, Betclic. Pretty much all over the world, we went to help companies raise money. So it's more karma, I think it's being the right place, right time.
Okay, so I infer from your sharing that your experience in P2P led you to these opportunities, and he's a very sought after ICO advisor. So next question, what do you think in this, so now we all know that we are experiencing the crypto market winter, and then it seems like things are not looking very good. So what do you think is the future of ICOs in the market?
So, I mean, this is exactly what happened in 1998. There's a very interesting book called Famous First Bubbles. Very interesting book. I mean, I recommend a lot of you to read it. Famous First Bubbles by Peter Garber. So Peter Garber was an economist in the World Bank, and he wrote a book where he studied all the bubbles across history, the Dutch tulip mania, right? So tulips are very famous in Netherlands, and there's a huge market for tulips. So they created a massive marketing campaign for selling tulips, and a tulip bud, a single bud, was 1,000 times overpriced in that tulip mania. Then the whole tulip market crashed. And he went and studied the stock market crash in the 1920s. He studied the dot-com bust. So every time he went and studied, and he came up with this hypothesis that human beings in the short term overestimate the importance of a technology and underestimate its impact in the long term, right? So, I mean, that is the hypothesis of that book. It's called Amara's Law. And that's what we are seeing in the crypto space as well. I mean, there's a lot of hype that gets built out. And you need the hype because without the hype, nobody will invest, right? Very few of us in our human nature have a mind of our own. We are always influenced by noises around us, right? I mean, we always take other people's opinions. We seldom sit down and rationally think, where is the value? So I go and ask a lot of my friends who put in money into Bitcoin, right? And they put in 5 million, 3 million, big money. And then I went and asked them, where do you see the value? What is the hype? A lot of them don't even know what the blockchain is, right? And then so this is the problem, right? So we have this sheep mentality somehow, where we always follow popular opinion, right? So common sense is not really common in our thing, which is why I think it's very important to go against the norm, right? And it's very important to challenge common understanding of what's going on and go against the trend. So a lot of my friends went against the trend, and then they went to invest in some projects where there was underlying value. So what we are seeing right now, the crypto winter, is because of that, right? People followed this mania. They went to invest in projects which had no underlying asset value. There was no real value for human beings to use some of the software. 90% of things that were produced did not make any sense for day-to-day lives, right? I mean, I'm sure 100% of people in this room, or probably 99% of people in the room, do not use a blockchain product in their day-to-day lives, right? The internet, dot-com boom, was a couple $100 billion. Cryptos in the heyday was over $1 trillion. Today it's at 150. The biggest crash in history. It's even bigger than the dot-com crash. This is the problem. Like, we don't use our own intuition, our own reasoning, and we always sort of think that somebody else is smarter, right? So I'm as silly as all of you, and as smart as all of you, So that's why I tell people, do not listen to my advice. Have your own opinions about things, because it's very important. And this is what has led to this mania, right? I mean, that human beings can be programmed in ways that is not good for us, right? I mean, social engineering, using marketing, using growth hacking, all of this stuff. I mean, if you actually sit down and study the dot-com revolution over the last 2 years, all kinds of neural linguistic programming has been used to sell this stuff. Bounty programs, all kinds of crazy stuff. But, I mean, there are real good projects that have come out, the Kyber network in Singapore, Zilliqa. I mean, there are very good projects out there that have real impact, but that impact will come another 2 years after mass adoption. So this is it's a problem of human nature, it's a problem of the way the societies are designed, because without capital, you cannot do innovation. Without creating the buzz, you cannot attract capital. It's a cyclical problem, the yin and the yang, right? It's a dark and the brightness. So the smart guys who make the money are the ones who actually see this coming, right? I mean, as the saying goes, right? If you don't know who the fool in the room is, it's apparently you. Right? So it's very important to think about these things, but we are seeing this is very good right now. What is happening right now for the market? I've seen this for literally 10 years. We've part of the whole genesis of the whole crypto revolution, and this has happened for many years. And the dot-com boom and the stock market crash in the Dutch tulip mania, the same patterns have come. So what it does is capital gets eroded, and people become more serious about investing. It takes 24 months today to build a product from the time somebody invests. And the tokens get traded. When is the value of the token? You have a utility token that has a utility on a product. Right? Able, for example, is a wireless mesh device. One of the first ICOs from Singapore. You have to have the Able token to buy access to internet services. Right? So they didn't do a public ICO, they didn't list an exchange because they were looking for real utility of the token. They were looking for real users to buy the token. So there is organic demand. 99% of the ICOs, there is no real use case, there is no product. So it's only speculative trading. Right? It's like going to what? A temple, mosque, or a church, hoping that there is God, right? And there is God. But you're thinking that there is God, and so that's what it is. And maybe there is God, and if there is God, you're lucky. Huh? What happens? What happens? So you cannot put things into chance, right? So, which is why it's important that a lot of these projects that are today have a MVP, which are ready to go operational very soon, are the ones who are raising money because there's real utility, real demand for the tokens. Everything else, I think you should just ignore. I mean, that's my advice to you. I mean, don't invest in ICOs where there's no real utility. There's a real life use case.
So the bottom line is that we should be discerning, and more investors have been discerning about the crypto products that have been rolled out, and we shouldn't fall prey to the herd mentality, and eventually the market will recover, right? That's the bottom line.
Well, it's going to be much bigger. I mean, so that after this correction, a lot of sense has prevailed, right? I mean, investors are asking difficult questions. Where is the value? What is going to drive the token price? So difficult questions are being asked, which people didn't ask before, right? Before they'd say, oh, so your token's at this price, I get a 5x, will I get a 5x return, 4x return? I mean, how can you predict that the token's going to get a 4 or 5x return? Right? There's one of the exchanges which had some advertisement saying they're going to pump a new token every 24 hours. It's like ridiculous. It's violating securities laws. So what we will actually see is, real use case, real utility, real projects coming out. The other thing that we saw was that in 2017, 2018, a lot of brick and mortar businesses which did not have any blockchain use case were force-fitting the blockchain. Right? They were force-fitting the blockchain to actually make sense, to raise money. The biggest fool idea, right? Who's the biggest fool? So, and there were a lot of fools who were throwing money at them. And so some of those brick and mortar companies have real revenues, they have real users, but they don't have a blockchain use case. So they will start raising money on STOs, where they will securitize their shares, their assets, their collaterals, and then we will see a range of new security tokens coming out in 2019.
Very good. This brings me very aptly to my next point. What is your take on STOs that you just mentioned?
So, STOs are security tokens, right? Everybody here, I keep hearing everywhere, oh, STOs, but there are not many STOs in the world. About 7 or 8, STOs right now. There's, funds, VC funds that are getting tokenized. So that's Spice VC. A couple of, it's a good way to raise money. And then you have hydro miners, some mining companies raising money on STO, and providing dividends on the shares through a security token. So a lot of them are talking about it, there are very few of them that have been done because the securities laws are very strict in countries. You cannot do it, it's not a utility token. A lot of these companies are private limited companies. They're not public companies. So you cannot publicly solicit securities for a private limited company. You violate the securities laws of the country, you can do that. So there are a lot of limitations in an STO. I mean, there are very few exchanges that have a securities license to list STO, right? So you cannot. There's hardly any in Singapore. I mean, I don't think there's an exchange that I know of in Singapore that can list a security token today. And there are a lot of things that you cannot publicly solicit securities. So you cannot do an ICO, you cannot do a public sale. You can only do a private sale when you do an STO. It's called private placement. And there are laws in every country, like in the US. You have to be an accredited investor. So there's Reg D, Reg A+, Reg C. Each of these things allow you to raise a certain amount of money from accredited investors. But then after you raise in that country, you have to do the filings in those countries. You have to do the Reg D filing, you have to make sure that you comply with the laws of the country. Singapore has its own security laws. You go to Malaysia, it follows security laws of the country. And there are limitations to the number of people you can solicit. Like, there are 50, you can only have 50 shareholders for a private limited company. So this is the reason why a lot of people talk about STOs, but they don't know what it is, because they've not done, an STO before. But having said that, I think it's a game of the lawyers. So the lawyers are the ones who make big money out of STOs because, it's a security, they have to comply with the security laws in the country. And we will see that because, last year, ICOs exceeded all the money that was raised by VC and PE 2 times. And we will see something similar happening with STOs because, with a share, you're a private limited company, if you have a VC or PE, when you invest, it takes 7 years to get an exit. You have to either do an IPO or somebody has to acquire your company, right? So here you have instant liquidity. You securitize your shares or your bonds or whatever securitize your assets, and the investor gets instant liquidity. If he doesn't like it, the security tokens gets traded and he gets the liquidity of the tokens. So this is a very powerful liquidity for a lot of companies, especially small and medium businesses that want working capital, that want to raise small amounts of money, $5, $10, $15 million. Because a lot of VC and PE funds do not have that kind of risk appetite, they can go and raise money from others. So I think that would be the primary reason for STOs booming in 2019.
And so, there are many industry users for blockchain. So can you give me one of the most common examples for industry use cases for blockchain?
Well, this is very important because everybody's talking about blockchain, right? I mean, I was in Indonesia at the Future of Finance event with the heads of the 4 big banks in Indonesia. I was at all these other places, and everybody talks about blockchain everywhere. I mean, there are a lot of people coming and saying enterprise blockchain is 2019. It's a big thing. We'll see a lot of companies producing enterprise blockchain products for B2B applications. So you need to understand that there are only 2 things that a blockchain does. It removes trust from the institutions to the network, and it disintermediates, right? So there are a lot of use cases where people are installing blockchain within organizations, right? And they're experimenting. So when you already have trust in the organization, you trust your employees, why do you need a blockchain? So a lot of these silly use cases will die away because a lot of them are still in POC. But the real value for blockchain is the edges of organizations, where organizations are sharing data between each other. So, where organizations don't trust each other. There are consortiums of companies come together. So there's a lot of value there. Like for example, there's a use case that I've been looking into in India, where multiple banks are looking to do check transfer between banks. So you run a blockchain node, you validate the check. The other person also runs a node, and then he's able to validate and do the transaction faster. So what it used to take 2 or 3 days is now done instantly using the blockchain. There are shipping consortiums that can come together and share shipping data. So it was very dangerous before for external entities to get access to your company's data. Now you can actually put them into the blockchain and secure it and share the data. So I think the value is in the edges of organizations. It's not within the organization. What's on the edges of organizations where the organization interacts with either the outside world or with other organizations in the ecosystem. So we will see a lot of those use cases come up. But there's a lot of silliness going on where people instead of using databases are running blockchain within the organization just to show their bosses that they're doing something in the blockchain, right? So that's what it is.
Okay, so one final question for you today.
And your mic finally works for the final question.
So, where do you see the blockchain industry in 2019? Will everyone here be very rich and famous, or will everyone here be like starving and I can't afford my next meal?
I think not just here, but everywhere else. I think a lot of people raise money because big institutional investors are getting on board. You need to understand that the really smart people, the whales, the sharks, are the ones who sniff blood in the water, right? So this is the time when everything is mispriced. Good companies are mispriced. The guys who made a ton of money are the ones who made money out of the dot-com bust or the 2008 financial crisis, because everything was mispriced. So the big crypto funds, the big hedge funds are getting on board and they're loading up on crypto assets. You're already seeing that. Now Bitcoin's gone up already from 3250 to over $1,000 over the last week. So funds are making a ton of money. I know funds have made 300%, 400% return in 3 weeks, 4 weeks. So we will see big institutional players come on board, but that whole thing where unemployed people wrote a white paper and got employed, that will not happen anymore. There will be sanity in 2019. And we will see a lot of very interesting things happen. We'll see tokenization of assets, like for example art. So a lot of art galleries are now looking at blockchain, big art galleries. Tokenization of gold and things like that we've seen. We'll get into securities because actually security, it's not a utility token securitizing gold. So they will be sent notices by some of the institutions saying that you're actually sending security masked as utility, so they will have to comply with the securities laws. You will see a lot of very useful projects that are coming out where there's a real life use case. There's cross-border money transfer, things like that. And I mean, those are. So I need to run from my airport, but I was trying to wrap it up, right? So what we've seen so far is the blockchain 1.0. What we'll see in 2019 and beyond will be blockchain 2.0. There is real life use case. There is real value for the real economy. There is top line, bottom line value add for organizations and institutions. Those makeup artists, beauticians, scammers who are raising money, they will all slowly vanish away because money is not left anymore in the system to go and be deployed. So, and the big guys are getting on board, which means more money. The big institutional players are getting on board. So we will see a very interesting 2019, which will be much, much bigger than 2018. That's my personal opinion. And it's just going to get bigger and bigger. I mean, there's, it's about volume and velocity. We are going from 7 billion people to 10 billion people, right? I mean, governments cannot cater to the needs of all those people. Private institutions cannot. So people have to come together around the blockchain organized economic activity. And that's the only way forward. So we will see a lot of that happening in 2019 and beyond.
Wow, that's indeed a very rosy picture. I see that we have one question. Do we have time to take one question?
Yeah, we'll do one question.
Thank you. Thank you for sharing a lot of info. My name is Venkat Jainaj. Actually,
I have 3 minutes. I run to my airport, so you have to be very sharp.
Okay, every country bringing their own cryptocurrency. What will happen for the decentralized cryptocurrencies? In your perspective.
So I mean, the Bitcoin was created to bring in a new way where human beings can have a personal relationship with their money. You didn't need to have a bank or some custodian to hold your money, right? The blockchain, you have a private key, you have private access to your labor. Money at the end of the day is time, right? Your labor and it's time. So you have access to your money, and what is happening now is that the Swedish government is creating its own krona, its own digital currency. So we'll start seeing sovereign currencies come out in 2019, 2020, where you can actually have direct access to your own government's cryptocurrency. Like there was a talk about the Lakshmi coin in India. So you won't need banks to hold your money because it's on blockchain. So you need a custodian to hold your private key. So the custodians will start making money, and custodians will become a big business, right? So because then what does the bank do? It takes your money, puts it there, and uses it for you. Hopefully, you'll use it for some economic activity, right? Investing somewhere, making multiplying, giving you interest rates on top of that. So we'll start seeing a lot of crypto banks when these things come out. So Christine Lagarde, who was the head of the IMF, actually came and said that, right? In the recent interview when somebody asked her. So we will see a lot of sovereign coins come out. That's the only way for banks to be relevant and the governments to be relevant. And so that's my answer. Thank you very much. I need to rush to my airport. But thanks for coming.